Hey everyone, and welcome back to Data Driven Value, where we show you the tools and we teach you the skills to help you take your financial freedom into your own hands. So, a lot of news today, as well as kind of some big market updates. We do see a massive dump day today. We see Bitcoin below 100,000. We see the SPY down almost 2%, the NASDAQ down almost 3.5%. So, one of the bigger single day corrections in the stock market in a long time. So we're just going to dive in a little bit into the charts and kind of what might be causing this volatility, see what we look for a short term, maybe some levels to watch. But yeah, just kind of getting into things. We'll break things down. So I do want to say that yeah, we are going through kind of a bit of a volatile time today. We're going to talk about a few of the factors that I do believe are affecting the markets right now. I just want to say kind of at times like these, often I like to just sit on my hands and kind of see what the market's going to do next. Kind of let the market show us their hand first before we kind of make any aggressive moves. We just see here, obviously, we came up here. Basically, we just had about a bit of a double top right here. So that's something we were watching on the SPY. In previous videos, we did talk about waiting for that breakout and retest confirmation before taking any additional long positions on the SPY. This is exactly why we kind of wait for that confirmation, because we see we came up here right into resistance, we rejected, and then we've had a sell-off right down to here. So the first thing I just want to talk about again, we discussed this in a previous video a couple days ago. We were talking about the Japanese yen carry trade. So we do see the last time that this kind of played out, we saw the Bank of Japan raise their interest rates the first time here right around July 26th, I think it was. So we actually saw the market was already in a bit of a downtrend. We got a little bump up here, but ultimately that just went into resistance and we sold off further over the next couple weeks. So it is important to note that that whole correction here was about 10%. We came down towards our 200-day moving average. I didn't quite get all the way down to it like we did over here, but we did find support and we were able to kind of recover those losses and keep moving up. But again, so we saw that little bounce here and then that sharp sell-off. Generally, yeah, these events, they do, I think, take a little bit to play out. Obviously, not everyone's going to be unwinding their trade at the same time. There is kind of that initial knee-jerk reaction by the market, but then kind of recover some of those losses. But again, the further unwinding of that trade, even other economic factors can kind of impact this as well. But if we were to see a similar retracement off of the current highs, that about 10%, 9%, that would bring us right down here into this 618 level from this swing low to this swing high. So that's a good target for kind of a more of like a value accumulation in the SPY. I do think if we come back and maybe tag the 200-day moving average right around this zero point 0.5 Fibonacci, that might be a good confluence for a little entry there. But that being said, there is some other existential risk in the markets, and we're going to get into that in a second. But we're just kind of looking here. Obviously, we see we've got a bit of a trend line from here up through there. So yeah, a little bit of support right here. We'll see if that holds. I would say we're more likely to maybe come down and maybe retest this 200-day moving average. Alternatively, we could end up putting in a higher low up here, in which case if we put in that higher low, we're just going to watch this low time frame structure and see if we can't break this high, get another higher low, and then we can continue this uptrend. It's really going to depend how the volatility plays out over the next couple weeks. I think it's a little premature to kind of just assume the bottom's in. I'm going to show you some of these stocks and some of these cryptos. They're really red today, so they're down a lot. There may be some that you might want to add to your spot positions. I personally am just sitting on my hands at this time. I have the spot positions that I want for the cycle at the prices that I want currently. This is just a little bit of uncertainty and extra volatility in the market. I don't feel the need for myself to just take any excessive risk by buying back into the market while we're right here. We're kind of just, again, we're in a bit of that no man's land. So not really trading here, just sitting on my hands, sitting on the positions that I've built with the cost bases that I've built, and then looking to kind of see what the market structure looks like, and then see if we can't find any additional entries in the assets that we want to hold for the remainder of the cycle. But yeah, obviously you can see through here, right across the board. Actually, the Dow Jones up a tiny bit. Interesting to see. It's probably just going to put in a lower high here and then come back down, I would think. But interesting to see Dow Jones recovering a little bit of losses. We look at the dollar quickly. So we did see the dollar sell off here. coming back into this area of support. So we'll see if it can bounce from here. Obviously, a bounce in the dollar is not going to be ideal for risk assets going forward. Again, though, the only thing we really see green, Dow Jones barely, but we see TLT here. So that's one I was talking about in recent videos as well as a bit of a hedge position. Essentially, TLT, just when risk and volatility enter the market, there's a flight to safety. So assets like TLT that are linked to the 20-year treasury bonds, they really offer this flight to safety that investors are looking for. So we do see here we've got the 20-day and the 50-day moving average curling up here. So nice to see. We've gotten above our 20-day. So maybe we come up, we get rejected by this 50-day moving average here, put in that higher low, maybe around the 786, and then we're able to kind of reverse that structure and continue to the upside. So we do have these hedge trades. If the broad market were to go down, just due to kind of a risk-off environment, then I do think that TLT could actually outperform some of these assets as they're going down. So yeah, we have a TLT position, and again, that's just our hedge position. So when I talk about hedging, I just talk about building your portfolio in a way that you can benefit from kind of any market direction. That's why I like to talk about having a cash position, and then I like to talk about having kind of some safe haven asset positions like bonds, high interest savings account, real estate, anything that you're not worried about crazy volatility in that, and it's kind of like expected for the value to go up over time. So we did see here TLT came down, tagged this heavy support zone, came back within our golden zone here, offered an entry there. It did come break below the 786, so offered another entry right there, and then now we're just off in the golden zone. So hopefully we just see this kind of keep going up. But yeah, interesting to see TLT with a little bounce. Looking at crypto, this is going to look really bad here. So we see Bitcoin, just hanging on to 99,000, looking really bad. We did come back, tag the zero point 0.5 Fibonacci. I did point out this 0.68 to 786 Fibonacci zone in a prior video as well. So again, that was another one. We were just waiting for the confirmation from the chart. So we see here we weren't able to break out of this wedge here. We actually broke down. So the most likely path, in my opinion, right now is just continued downwards price action or consolidation. I would like to see some of these lower levels maybe revisited. Look for a bit of a swing position in here. But again, we're going to be watching the SPY because there could be some broader market implications just due to some of the news that's coming out recently. But yeah, watching that. Obviously, we see dominance doing well. Not ideal for you altcoin holders. I did show this on a video as well. We showcased this big breakout of this downtrend and a beautiful retest before we continued on to new highs. So that's kind of the downtrend we are looking at. And then using our Fibonacci tool, we pulled from the low to the high. We see our 618 bounce here, and then we're just continuing on that uptrend. So yeah, really watching dominance. We want to see that top before we can start to see Ethereum and some of the altcoins outperform. So until we actually see that, yeah, I definitely am not getting too aggressive in altcoins. There are altcoins that I'm currently building spot positions in, and I have been building throughout the cycle. But right now, I'm just kind of leaning towards, again, just sitting on my hands. We don't want to rush into anything and get caught on the bad side of a trade. I always say that wealth preservation should be first, and then wealth growth should be second. You can't grow your capital if you're buying into resistance up here and you go down 60%. It's going to be substantially harder to actually grow that capital. That being said, if we do miss an opportunity, it's okay. There's a million opportunities in crypto and investing. There's always a bull market somewhere, and there's always opportunity. So we don't get hung up on missing out on some runs, but we also want to make sure that we're managing our emotion and we're not buying into resistance or we're not buying into weakness and not taking on that excessive risk. So we can see here, Ethereum USD obviously didn't break out as we hoped. So this is obviously negated. We broke down, again, look for that retest of now resistance, and then probably come back and we'll tag this support zone again. I'm looking at ETH Bitcoin, so it's going to be looking bad, obviously. If Bitcoin dominance is looking good, then ETH Bitcoin is looking bad. Still, again, that's just a technical downtrend, so really pay attention to the structure. We just see it tried to change trend a couple times, but ultimately the macro trend has just been lower highs and lower lows. So again, we just want to see that bottoming structure. We're coming back to this heavy support zone, but we'll see if we can get a bit of relief here or if we're destined for lower targets. That being said, kind of anything sub 0.03 ETH Bitcoin. If the cycle is to continue playing out as a traditional cycle, that's a really good opportunity to accumulate. Lots of people now flipping bearish on ETH Bitcoin, which is kind of funny because at the time of the merge, so I'll show you that quickly right here. This is actually the top of this channel. Everyone was calling for the flippening here, so everyone was saying Ethereum's going to flip Bitcoin with the new merge to proof of stake. It's going to be deflationary, and then this is the subsequent price action, and then now people are flipping bearish on ETH Bitcoin. So it's a little ridiculous. Obviously, the bulls up here got smoked, and the bears down here are probably going to get smoked. That being said, can it break lower? Yes, price can always break down lower, but in my opinion, we're closer to the lows than the cycle highs. Again, this is assuming that continued cycle structure plays out. So if something were to happen that just changes the overall market structure and we could expect maybe a bear market or kind of a mid-cycle large correction, then kind of some of these bets are a little off the table. That's why I like these zones here. So really just looking anywhere kind of from the current price down in this zone is worth accumulating Ethereum if your goal is to outperform Bitcoin. Then kind of moving down, we obviously see altcoins not doing well. Others dominance. We did take a look at this one. So again, we wanted to break this high or this high here. We weren't able to get rid of that. Again, we're just breaking down, and then we came back tested it, continued breakdown. If we pull our Fibonacci, we might be able to look where we might be able to find a little bit of support here. Obviously, yeah, we're right at that 786, so we'll see. Maybe there's a little bit of support on the low time frame, but we have to watch this. And right now, all I see, again, this is just that downtrend price action. There's a little higher low here, so you could reverse price action on the low time frame if we were to do something like this, and then kind of just keep grinding up. I want to see these highs taken out. So yeah, right through here, that needs to be taken out. That is resistance right now. If we do get rejected here, again, the most likely path to me is just further downside. So we're watching that. Obviously, I'm not going to go into too many altcoin charts right now. Obviously, you can kind of take a look at the past videos. Some of them are at levels of interest, but I'm just kind of in the camp that there's too much uncertainty in the markets right now for me to really be kind of taking aggressive positions at these levels, considering the cost basis that I was able to get into. Then we see here kind of, yeah, right across the board, anywhere 5 down 10%, 10%. We actually see Tau up a little bit. But yeah, everything pretty much red, 5, 10% across the board. We'll take a look, obviously, here on our crypto indicator risk dashboard. We did see the risk tick down a little bit. So it was at 0.5 yesterday or the day before. So tick down a little bit with that dump. Obviously, the social metrics ticked down a little bit as well. So this is the major news that's really causing a massive sell-off in markets. We see DeepSeek's Sputnik moment prompts investors to sell big AI players. So we see tech stocks sinking, Nvidia drops sharply pre-market, investors seek safe haven assets, dollar falls. So that's where we see the investors flowing to stuff like TLT for that safe haven. We see investors hammered technology stocks on Monday as the emergence of a low-cost Chinese artificial intelligence model cast doubts on Western companies' dominance in this sector. See, DeepSeek here launched a free assistant that uses less data at a fraction of the cost, possibly marking a turning point in the level of investment needed for AI. So we all know we've been talking about the hundreds of billions to even trillions of dollars being invested in different AI startups, AI infrastructure, chip manufacturers. AI has really been the major hype in the market and the major driving force in the SPY that's kind of caused it to continue going up. Most notably that most of the returns coming from Nvidia. So Nvidia has been insane, but obviously AI kind of kicked off things, around like 2022, 2023, and we pretty much have just been up and to the right since then, with just a handful of companies actually kind of making up the majority of those gains. So not really indicative of the overall market conditions, and kind of more reminiscent of maybe a tech.com like bubble. So I kind of just want to talk a little bit here. Obviously, they released this new model, and essentially it's able to do the same amount of work for about 96% or 96% discount to cost. So really a lot more efficient than any kind of public model that's made available in the States right now. It is interesting to note, obviously, we see the futures on NASDAQ slid 4%. So the reason that kind of the markets have sold off essentially is a lot of these AI related companies were just getting crazy valuations due to the amount of capital that was previously thought to be necessary to be such a major player in AI. We're seeing now with DeepSeek and their ability to kind of produce similar results or better results for a 95% discount, that's kind of not true. So now we're starting to see a revaluation on assets within the AI sector. So I do think it's going to hit most of the companies that are actually building AI models the hardest. But at the same time, it is going to have an effect on chip manufacturers because it could affect demand, as well as kind of some of the other contracts that have already been made. So something similar that I want to talk to in the previous Bitcoin bull market, when you go on these crazy let's not call it a bubble, but when you go on these crazy hype runs around a certain narrative. So obviously last cycle, Bitcoin mining became a huge narrative. Obviously, as prices were going up, we started to see the actual infrastructure really garnish a premium. So people were having to pay, 3, 4, 5 times as much for ASICs as they were paying in the bear market. And then we saw a lot of these companies during kind of peak euphoria times. They were executing massive purchase orders of this infrastructure and this equipment at peak prices. So essentially, what you want to do is you want to buy this infrastructure when it's cheap, so you can benefit from the inevitable upside in the future. If you're buying infrastructure at a premium, it's going to take longer for that equipment to pay itself off. And that being said, you're also taking on more immediate excessive risk just due to the amount of capital that's required. So obviously, last cycle we saw Bitcoin miners. A lot of them were, buying rigs, buying data centers in the peak bull run prices, paying a huge premium. And then we saw that massive DeFi implosion where the market melted down, and we actually saw that stock market correction of about 25%. So during these times, those companies that took on that excessive risk at the peak prices, they actually weren't able to hold on to these assets because they had to cover their liabilities. So that's when we saw companies like CleanSpark. They didn't buy into the peak price FOMO for equipment. Same thing that we do with assets. We don't want to FOMO into the peak prices. We want to buy when things are cheap, position ourselves, and then we want to take profits when they make sense, when the time comes. Same thing with these miners and same thing with these AI companies. They want to buy their infrastructure cheap, and then they want to be able to take advantage of the boom cycles where that infrastructure can then pay itself off much more quickly than if you were to buy at peak prices. So it's just an interesting thing to note. I kind of see this. It's a potential similar situation as what happened with the Bitcoin miners, where they really overvalued a lot of the infrastructure and the equipment on a short-term basis just due to the hype around the assets. And then that all that kind of just mean reverts. Prices come back down to where they should be. We start to kind of see some of the froth in the market get flushed out, and then we see valuations come back to a bit more like normal valuations. That's another thing I'm kind of going to talk about just for a second. Just the valuations on anything that's mentioned AI in the last couple years have really just shot to insane numbers. That being said, I've been trying to find different undervalued AI plays, and it seems like every chart I look at just looks insane. It's kind of scary to buy into a lot of charts like that, so I kind of just look over them. So perhaps maybe over the next couple weeks, if we do see continued volatility, continued repricing around some of these AI related stocks, it might actually present some pretty good buying opportunities. So we're going to be looking for those opportunities. We're not really scared, obviously. We didn't take our risk up here, so we're not worried if prices come back down. And we have our cash position, again, where we build those positions that we want to hold long term. And yeah, just kind of waiting for the charts to let us know where things are going. It's kind of moving on here. That was the biggest daily slide since September 2022. That was the start of kind of a big dump in the market. We saw S&P drop 2%. NVIDIA fell more than 11%. Oracle dropped 8.5%. Palantir lost 6.5%. These are huge companies losing 2%. For the S&P to drop 2%, that's pretty crazy. We do see this has raised questions about the sustainability of the level of spending and investment on AI by Western companies. So again, that's what we talked about. If these Chinese companies, if they're able to kind of produce similar results for 1/10 of the cost, it really doesn't justify the amount of investment in the US. That being said, I'm not bearish on the actual infrastructure plays. So when I talk about that, I'm talking about the chip manufacturers, the server manufacturers, the data centers. I'm not talking about not talking about the actual like the companies building AI models, I think there'll always be crazy competition in that space. It's one again that I'm not as interested as kind of getting involved in. I'd rather stick to the infrastructure plays like the data centers or the chip manufacturers. That's just my personal strategy kind of surrounding this. We see here though, we still don't know the details, so no one really knows how true this is. It's really hard to kind of take news these days, especially you'll get a news headline and within 48 hours it's been debunked. So a lot of the times we see the news, but we might not actually have any confirmation for another 24, 48 hours. So you see here, obviously nothing's been 100% confirmed yet. It's actually very positive for productivity and AI end users. So basically, this is going to actually increase competition and lower the cost, which means the consumer actually ends up footing a lower cost at the end of the day, which is nice. Like, obviously, we don't care as consumers really about how much the corporations are making, but as investors, we kind of do. So it's a little bit of a contrast there. We obviously want to see our companies that we're invested in as profitable as possible, but at the same time, on the consumer end, we do want lower costs. So we'll kind of see how that plays out going forward. I do expect as more and more chip manufacturers get involved in the space, it's just going to take away market share from NVIDIA. We kind of see that in electric vehicles as well. Obviously, NVIDIA's like the Tesla of AI chips is kind of how I see it. They kind of have the immediate market share, the notoriety. They have the hype. They don't need to market. Like everybody knows who NVIDIA is, but there are a ton of other chip manufacturers that are used by pretty major companies. We shouldn't really discount those players just because NVIDIA is more of a well-known name. So that's just something to keep in mind. But we see here, they did reference this as a Sputnik moment. So that's referencing the former Soviet Union's launch of a satellite that started the space race. So while in the near term, this can be a little bit bearish for the companies who are trying to raise money for AI modeling. But at the end of the day, this is going to be good for competition. And essentially, if it does kind of start its own little, let's say, space race, but little AI race, it'll really be interesting. And we'll continue to see more and more capital still flow into this space. There's still going to be massive growing demand for AI. We don't have a really good AGI model yet. I don't think. So again, obviously, and it's going to be used for medical and more. So there's always going to be that demand for AI, especially with the way kind of society's going these days. I think AI demand is just going to increase. So that's why I do think that there's a lot of demand still for the chip manufacturers and the infrastructure plays. But there's going to be so much competition within that AI modeling space. And a lot of it, yeah, it's kind of ambiguous. There's no concrete kind of examples or data you can look at. So it's kind of right now on that trust me, bro, kind of space. So we're just not that we're not interested in it, but we're just kind of watching it from afar a little bit, just taking a bit of a cautiously optimistic approach. See here, investors sought out safe havens such as U.S. Treasuries, push the 10-year yields down nearly 10 basis points to 4.5%. And then we see here, NVIDIA risen over 200% in 18 months, trades at 56 times the value of its earnings. So yeah, pretty crazy valuation for NVIDIA. A lot of people have been saying that it was unjustified for the longest time, and kind of with this new news, if it is substantiated and it is true, then some of that may actually have some weight, and we might start to see a bit of a revaluation on companies like NVIDIA. And then we also see the idea that the most cutting edge technologies in America, like NVIDIA and ChatGPT, are the most superior globally. There's concern that this perspective might start to change. I also kind of believe that. So if you think of Asia, you think of China, they're really technologically advanced. So even though we are technologically advanced in the West, I would argue that China is definitely more technologically advanced. So to think that they don't have models or kind of the ability to produce platforms like ChatGPT or better, I would say that's just kind of a little ignorant. Obviously, they can produce a mod they could produce whatever model they really work towards. I'm obviously not an engineer. I don't know the logistics behind it, but I do recognize the kind of the technological aspect in China and their ability to really kind of innovate on that front. Moving on, we also see here deep another in subsequent to that. So this was just updated an hour ago. They launched their Janus Pro 7B, so a new open source AI model. So this essentially deals with image generation. So the new Chat GPT models, they can deal with image generation. But again, it just shows you that DeepSeek is really kind of pushing the fronts of their competitors here and trying to kind of capture as much of that market share as possible. We did see that their downloads definitely surpassed the other competitors on the App Store as recently. Another one. So again, this is just I'm talking about more and more competition. Convergence AI proxy. So this is Europe's bid to outpace OpenAI. So we've got China competing with the States. We've got Europe competing with the States. Everyone's going to be competing with their models. We see here Convergence AI launched proxy, free basic access tier, and unlimited session plan for 20 a month. So that's significantly undercutting its competitors' pricing. Again, if they're able to offer a similar product at a cheaper price, they're generally going to attract more business. So nice or interesting to see both China is able to kind of undercut it due to the efficiency of their chips or of their model. And then here they're able to actually undercut the overall pricing of it by convergence. So this introduction of proxy has sparked discussions on affordability and accessibility. So again, yeah, just affecting the profitability and what other competitors are able to charge for their same products. And kind of just diving into convergence a little bit, looking at it. So they're developing genuinely versatile agents that learn, evolve, and collaborate with humans. Their goal is to create AI that doesn't just process information, but acquires new skills and improves over time like we do. We see here they've built the first AI agent that can reason like a human. This allows us to teach the agent the same way we would teach a colleague or a friend. And by giving AI the ability to learn from specific feedback and apply it generally, we are crafting assistants that not only execute tasks, but apply what they've learned to new challenges. So essentially this AI model is kind of just going to be able to learn a little bit more, a little bit faster than the previous ones. And we see here, we want our users to decide what their agent is best at and to apply its capabilities in unique and exciting ways that make a world a better place. So you're able to kind of customize the AI agent more for your own needs, whereas the other ones are kind of a little bit more kind of a overall blanket for similar for a lot of people. And we do see here they assembled a world-class team of machine learning experts and engineers from leading technology companies such as Shopify, Cohere, Uber, Meta, and Google DeepMind. So yeah, a pretty smart team probably behind them if they do have previous engineers from some of these companies. And again, just kind of showcasing you really the competition in the space. A little bit more news kind of might be kind of contributing to a little bit of the volatility. We did see here, U.S. and Colombia were in a bit of a standoff here in regards to a trade war. So we did see basically the U.S. deported some Colombian migrants. The planes were sent to Colombia. Colombia initially had said they were not accepting the planes, in which case the U.S. threatened to sanction them with tariffs. And then we saw Colombia threaten them back with tariffs, and we saw there was some speculation of a few different South American countries kind of banding together to kind of fight this strong hand by the U.S. We see here Brazil obviously condemned U.S. handcuffing those migrants on the flight. So I don't want to get too political about this, but what I do want to just reference is because I talked about this the other day with the JPY carry trade and how it can actually, some of this and some of the tariffs can actually influence or cause trade wars. So we did see here, obviously, the U.S. and Colombia pulled back from the brink of a trade war. Both of the countries were ready to slap tariffs on each other. But then, yeah, we see Trump threatened tariffs and sanctions on Colombia, and they eventually did accept those flights. So that was resolved, but I don't expect this to kind of be over. Obviously, Trump thinks he can just threaten tariffs to anyone who doesn't agree with him or doesn't like what he's doing or doesn't agree with his policy. He's done it to Canada. He's done it to Mexico. He's done it to Colombia. They're probably going to do it to China. So that being said, I would be worried about the potential for a trade war in the coming years, especially depending how serious kind of he is regarding these tariffs. I don't know if he's just using these as threats to get his way or if he's actually serious about enacting them. But kind of in the long run, although like the tariffs, they might be all right for domestic business. At the end of the day, these trade wars generally just increase the cost of goods, and it ends up being the consumer who hurts at the end of the day. They kind of foot the added cost. So a trade war, I know a lot of people are celebrating for Trump to put in tariffs because he said that it's going to save the U.S. economy. That being said, I would really be wary about those because it can result in a trade war, in which case you as the citizen might actually end up footing some of the cost. Something to keep in mind there. Yeah, it's not like there's no negatives to this of just putting tariffs on everyone and everything. There's always some downside, and we need to recognize that in the market. Just going on here, a little bit more bearish news. Obviously, see the Ethereum Foundation selling another 100 Ethereum for some reason. I'm not sure why they need this money every once in a while, but it's really not that. It's not very motivating to see the Ethereum Foundation selling Ethereum all the time, especially right when things are dumping. It's pretty interesting. But moving on here, obviously we see the World Liberty Finance wallet. So just kind of, not that I'm bearish on Ethereum. Obviously, it's their largest holding of Ethereum, and then staked Ethereum is the next one. So again, that was about 65% of their wallet value. So with the current valuation of Ethereum, Bitcoin, and kind of the stance that the new administration, I assume, is taking on Ethereum, I do still consider it a good opportunity. But again, everything we've talked about, recognize the immediate risk and then only take on as much risk as you're comfortable with, and really, try to build those positions as time goes on. This is a long game, so don't feel like you got to put everything into the market and you're going to miss out on all the gains if you don't put it all in right now. We really want to practice that patience, manage the emotion, and then execute our strategy as kind of the time comes. So just following along. And then we see here, we'll get into a little bit of bullish news. There's not a bunch. Obviously, it's been a pretty rough day across the markets, but we see MicroStrategy buying again, launches preferred stock offering to buy more Bitcoin. They accumulate a total 471,107 Bitcoin. They've added 12 consecutive weeks in a row, buying another 10,107. Done so through a preferred stock offering to continue its accumulation. And yeah, now holds 471,107. So we see here the Series A perpetual preferred stock will have $100 liquidation preferences with cumulative dividend. And then we see the total Bitcoin holdings of 471,107 at an average price of 64,511. And then we see here on January 21st, the shareholders approved increasing the authorized shares to 10.3 billion from 330 million. So there's tons of room here for MicroStrategy to raise funds and continue acquiring Bitcoin. They also filed a mixed security shelf registration, which includes debt securities, preferred stock, warrants, and depository shares. So various different capital raising vehicles here that they're able to kind of tap whenever they want to buy Bitcoin. Just moving over to the microstrategytracker.com. If you haven't been here, it's a great website. But you can see here, we're just kind of tracking the NAV. So we see here the NAV against the diluted share is 2.0. So that was well over 3, a couple months ago or a few months ago. I can't remember exactly. But that NAV multiplier is really coming down. The reason that's important, as MicroStrategy gets to a lower and lower NAV premium, it makes less sense for them to dilute their company to fund their acquisition of Bitcoin. When they get down to 1 NAV, essentially, that's a lot of risk. You have to assume that the Bitcoin you're buying at that price is going to go up and that it's going to go up more than you're diluting. So we're just following this again, not alarming yet, but the lower this NAV premium gets, the less sense it makes for MicroStrategy to acquire Bitcoin. So something we're just following along with. Obviously, yeah, we see Bitcoin at 99,000, the market cap. So we'll move over here. A bit more bullish news as well. Whether you like Ripple or not, I personally don't like Ripple for a few reasons, but nonetheless, this is bullish news. We see here the company now holds over 55 money transmitter licenses in the U.S. after securing new licenses in New York and Texas. Its domestic hiring has doubled since 2023, so really pushing it within the states, getting as many licenses as they can, as well as expanding the actual team behind it. So we see here they saw strong demand for real-time global payments from both banks and crypto businesses in New York and Texas. I would say Texas especially, just due to the fact that it's going to be such a hub for Bitcoin mining. And then we see here with this latest acquisition, the company holds more than 55 U.S. money transmitter licenses across its payments, custody, and stablecoin business. Holds a BIT license in New York. And we also see here a major payment institution license in Singapore, virtual asset service provider registrations in Ireland and the Cayman Islands, and in principle license from Dubai's DFSA. So they've really covered a lot of different jurisdictions and gained these regulatory licenses here. So they're able to provide cross-border payment solutions and manage end-to-end transactions on their behalf. So yeah, really good move from Ripple here, securing all those licenses kind of before any competitor's been able to. It'll give them definitely a competitive advantage, especially if I know Trump has said they don't want to develop a CBDC. Although Ripple wants to develop stable coins, but I almost think of Ripple as a de facto CBDC. But that's kind of just because I don't really like the team behind the project. I kind of digress in that sense. I won't get too far into it. If you're bullish on Ripple for whatever reason, don't let my thoughts dissuade you or anything like that. We can all have different strategies and different assets that we're bullish on. Ripple's obviously gonna have a good future ahead of them. They had a long fought battle with the U.S. SEC, so they really pioneered that front. I have to give it to Ripple for not kind of bending over and taking it from the SEC. They really stood up for themselves and they stood up for the industry, and they actually risked a lot. And so hats off to them for really kind of sticking their heads out for the whole industry. Obviously, they had personal interest in it, but yeah, they kind of did what no other company did and really just took it to the SEC. So good job to them. We did see here they found the XRP offerings to the retail customers legit, but they did violate U.S. laws with the institutional offerings, so they did pay a $125 million fine. Yeah, so not a total win, but again, overall, pretty good win for Ripple. And now they have all these money transmitter licenses, so they're able to kind of offer these services as soon as they're made available to the public. So we'll take a look a little bit. We'll just kind of take a look at the charts again. There's not a lot I want to look at. Obviously, miners are hurting really bad today. We see Bitcoin, huge dump. Miners, again, I said they're leverage proxies on Bitcoin. And then a lot of these miners are actually tied to AI companies, or not AI companies, but they have a kind of an AI aspect as well. So definitely some added downside here. In the ones you see, anything down 25 to 30% essentially has really kind of focused a lot more on the AI side, in my opinion. And we see CleanSpark down, Mara down about 10%. So CleanSpark, Mara, they're more pure form Bitcoin miners. And then we see Hive down about 10%. So again, another more pure form Bitcoin miner. But yeah, pretty red across the board. So a rough day. Again, we're not running or rushing into any positions. We're just going to let the market show us its hand. We're going to make a strategy. We're going to follow that strategy, and then we're going to ride the momentum to the next targets. So that's all there is today. I know it's a tough day. Just stay sane out there. Stay safe. Don't take any excessive risk. It's a great day to go outside, touch some grass, walk the dogs, that kind of thing. Really just, you don't have to sit here and watch the markets. It's going to be rough. This isn't going to play out over one day. I do think we probably have a little bit of volatility over the coming weeks. So we'll just be watching that, and then we'll adjust our strategy as we see fit. So if you found anything of use, please like, subscribe, and share. It all means the world to me. If you have any chart requests, any questions, please drop them in the comments. I try to answer everyone, and then we'll include those charts in a future video if you do wish. Until next time, though, thank you guys so much for watching, and I'll see you in the next one. Bye.